Hey everybody, how are you guys doing? Welcome to the Trade Confident channel. Thanks for just hanging out with me today. I'm gonna go over the difference between market orders, stop orders, limit orders. You guys might know what some of these are, but maybe not all of them. I'm gonna start with the most common, and that has just gotta be the market order. It doesn't matter if you're a new trader or an advanced trader. The market order is just like the easiest order. It's what everybody kind of starts with. A lot of MT4 people use it for EUR/USD. But I'm gonna go over this as if you guys are trading whatever you wanna trade. Crypto, stocks, forex, it does not matter. I'm gonna explain the principles behind these so you can use them on whatever you're trading. So let's get into it. So market order. This is going to be the order type that you want to execute if you want to get into the price as fast as you can. And I'm referring to the live price. So the live price right now is 1.20351. If I wanted to get into a long position as fast as possible, I'm going to be hitting the market order. If I want to short this position, I'm going to go market order. This is the order type that's going to get me into the market, for this example, EUR/USD, as fast as possible at the current price. All right, moving on over to the right. What is a buy stop? So if the price starts heading up here, maybe it creates a resistance point, price starts moving back down, and then I want to catch this as it breaks out past resistance, I can place above the current price a buy stop. When this level or this price is hit, whatever I place my buy stop at, when that is hit, it's going to take my shares, my my shares, my crypto, my I'm trying to think of what it is in a forex. It's so weird. Forex doesn't really have anything, does it? I'm just kind of realizing that right now. Well, whatever. You're just gonna take whatever price that is, and you guys are gonna get into the market at that price, and it's gonna execute as a market order. I'm gonna have to do some research on that. What do you call it when you're doing forex? It's not shares. It's not pips. Currency? Your currency? Anyways, so that's going to be a buy stop. Conversely, as the price starts moving down, if you think this bad boy is going to hit support and just boom, break through, you guys want to be doing a sell stop down here. Now, this is not trade advice, but I'm giving you guys some examples. Sell stop right down here. This means, hey, brokerage, look at this level. Look at this price level I'm putting in here. If the price hits that, get me in at that price as fast as possible. And how is it going to do it as fast as possible? It's going to be using a market order, just like it does on the first order type here. So a market order gets you into the trade as fast as possible at the current price. A buy stop gets you in at a certain price, executed as a market order above the current price. And a sell stop gets you in below the current price and is executed as a market order. Now let's move all the way to the right, or on your screen, probably all the way to the right, something like that. So sell limit. This basically says if the price is here and it starts heading up, you want to sell at this price right here, 1.20705. That's where the blue line is. They're pretty close to it. You're telling your brokerage, hey, I want to sell at this price or better. So this means you're not going to be filled on your shares, stocks, or whatever we're going to call this for Forex. You're not going to be filled on that until this price is hit or a price above it. Okay, it's going to get you into the best trade possible. It will not fill any orders below this line. Okay, follow me, and I'm going to make a caveat to this right after this. As the price goes down, if you want to buy at this blue line, and let's call that 1.20006, if you put that into your brokerage, whatever amount you guys are buying, it's going to buy at that amount or less to give you the best price possible. Sell limits and buy limits are all about best price possible, okay? But here's the caveat to the sell and the buy limits that you need to know. Unlike market orders and stop orders, which usually fill your whole position size, your sell limits and buy limits may not actually fill fully. So that means you may have multiple buys and multiple sells in order to fill your whole order. That's something you need to remember. Now, none of these orders are guaranteed to fulfill completely, but if you guys have the mindset of I want to get into the market with a set percentage of my portfolio, and especially if you're using, strategies like I've taught, like cover your loss, where you need to risk a certain amount every single time because it's part of your strategy, and you need to get those shares, crypto, forex executed at a certain price altogether, then you're going to want to be using possibly, not financial advice here, but a market order or a stop, okay? A market order or a stop order. This is going to execute at the current price and is going to get you fully into your position as best as possible, unlike sell limit and buy limit orders, which may fill in a few buys and sells. All right, that's all I got for you on today's video. Actually, no, I don't. I got some more for you. You want to know how to actually place these on TradingView? I'm going to give you a little extra if you want to stick around this far. So you come over here, hit stop loss, hit take profit. Let's say you want to come in here and you want to do a 20 pip stop loss and you want to do a 20 pip TP. Great. I am not telling you to buy or sell right now. This is just an example, okay? Market, simply click here. Limit, click here. Stop, click here. Pretty simple, isn't it? Make sure you guys, if you want to go long, you have it set to buy. If you want to go short, you set it to sell. The only thing left to do, in my opinion, after you have your stop loss and your take profit set, is put in your risk percentage, or put in your dollar risk, or put in your units. I like to use risk percentage a lot, so I might come in here and say like, okay, I want to risk 1% in my account. Great, you can execute that trade. At a market, it's going to get me at the current price. Well, what if I want to do a stop? I can come in here and say, all right, stop loss is 20, take profit is 20, the risk is 1%, and what do I want to do? I want to execute this at, let's just play around with this price, 1.20771. So 20771, 20771. And we are going to buy it because it's going to be a buy stop. It has to be above the price, remember? That's why I wouldn't execute it. Watch this. Red. Why isn't it not letting us do it? It's because the price I entered was above the price and not below. Okay? So that needs to be a buy. That is how you do a stop. Now you do a limit. Great, so this is saying I want to buy this price and I want to buy it down here at, we want to buy this at 20006. Great, 20006. Limit, great, that's going to execute. You want to see what happens when you do this? Actually, I'm not going to do this because I'm on an Owanda account. I don't want to do that. But go into a paper trading account and test this out. Test it out on a crypto, test it out on a stock, test it out on a forex, whatever you want to test it out on. This is awesome. I love TradingView for this matter. If you don't use TradingView, doesn't matter. The principles still apply to the market order, the stop orders, and the limit orders. Have a good one, guys. Thanks for hanging out on this channel with me. Trade confident, watch more of these videos, and I'll see you guys on the next one. Bye.